Hello, I'm Sebastian. Welcome to 9 Trees podcast. Today, I will summarize and review the book. The Joy of Accounting by Peter Frampton positions itself as a practical, confidence-building guide for people who have always felt that accounting is confusing, intimidating, or overly technical. Instead of treating accounting as a set of rules to memorize, the book frames it as a logical system for telling the story of a business through numbers. It aims to remove the mystery around financial statements by showing how everyday transactions flow into reports and how those reports support better decisions. The emphasis is on clarity, pattern recognition, and real-world usefulness rather than jargon. Readers are guided to understand the purpose behind debits and credits, the structure of the accounting equation, and the connections between profit, cash, and balance sheet strength. The overall approach is designed for entrepreneurs, managers, students, and professionals who need accounting literacy without pursuing a full accounting qualification. The promise is a game-changing shift from fear to fluency by making accounting feel learnable and even enjoyable. I will give you key takeaways from this book. Firstly, accounting as a story, the logic behind the numbers. A central idea in the book is that accounting is a structured way to describe what a business owns, what it owes, and how it performs over time. When readers treat accounting as a narrative system rather than a set of arbitrary conventions, the core mechanics become easier to grasp. The book emphasizes the accounting equation as the foundation, linking assets, liabilities, and equity in a way that explains why records must stay in balance. From that base, the reader can understand how common activities like selling a service, buying inventory, paying wages, or taking a loan create predictable changes in the financial picture. This topic focuses on building intuition. If you can describe what happened in plain language, you can map it to the accounting impact. That shift is especially useful for non-accountants who get lost in terminology. By reinforcing the idea that every entry answers a simple question about value moving or obligations changing, the book helps readers stop guessing and start reasoning. The result is a more durable understanding that supports both study and practical work in a business setting. Secondly, debits and credits without fear, a clear transaction framework. Many learners struggle with debits and credits because they try to memorize what debit means in every context. The book addresses this pain point by encouraging a consistent framework for thinking about accounts and their normal balances. Instead of treating debits and credits as synonyms for good and bad, or increase and decrease in all cases, the reader is guided to see them as directional tools that depend on the account type. This topic explains how a repeatable process can reduce errors, identify the accounts involved, classify each account, determine how the transaction changes each account, then record the two-sided entry that keeps the equation balanced. By practicing this pattern, the reader can handle new scenarios without relying on rote learning. The book also highlights why this system exists. Double entry accounting is designed to create internal checks and a complete audit trail of what happened. That perspective helps readers appreciate the discipline rather than resent it. As confidence grows, debits and credits shift from being the most confusing part of accounting to being the mechanism that makes accounting reliable, traceable, and easier to review. Thirdly, how financial statements connect, income, balance sheet, and cash flow. A frequent gap for beginners is understanding how the main financial statements relate to each other. The book treats the income statement, balance sheet, and cash flow statement as interconnected views of the same underlying activities. This topic focuses on making those connections practical, profits affect equity, timing differences create receivables and payables, and cash moves according to when money is actually collected or paid. By walking through how transactions flow into accounts and then roll up into statements, the reader can see why a profitable business can still run out of cash, or why cash growth does not always mean the business is healthy. The book encourages readers to look for the drivers behind changes, not just the final totals. That includes understanding depreciation, inventory movements, customer credit, and debt financing as common reasons that profit and cash diverge. Once readers can trace a business event through to its statement impacts, they gain the ability to interpret reports rather than simply read them. This skill is crucial for entrepreneurs and managers who must make decisions based on financial signals, not on intuition alone. Fourthly, practical decision making, using accounting to run a better business, beyond recording transactions. The book positions accounting as a decision tool. This topic emphasizes how basic accounting knowledge supports everyday management choices, such as pricing, cost control, budgeting, and evaluating performance. Readers are encouraged to focus on the meaning behind categories: revenue quality, expense behavior, gross margin, operating leverage, and the difference between one-time and recurring items. When those concepts are clear, the financial statements become a dashboard rather than a compliance document. The book also helps readers think about trade-offs, like offering customer credit to grow sales versus the risk to cash flow, or investing in equipment versus preserving liquidity. A practical approach to accounting highlights the importance of tracking, consistency, and reviewing trends over time. It also supports better conversations with accountants, bookkeepers, lenders, and investors because the reader can ask smarter questions and understand the answers. The key benefit is independence. Readers can spot issues earlier, test assumptions, and make adjustments before problems become crises. Accounting then becomes an ally in building a stable, scalable operation rather than an annual headache associated with taxes and paperwork. Lastly, common pitfalls and confidence builders, avoiding errors and misinterpretation. The book aims to reduce beginner mistakes by clarifying where people commonly go wrong and how to build habits that prevent confusion. This topic covers misinterpretations such as assuming profit equals cash, treating all expenses as immediate cash outflows, or misunderstanding balance sheet accounts as irrelevant. It also addresses practical errors like misclassifying transactions, ignoring accrual timing, or failing to reconcile key accounts. By encouraging a structured review process, the reader learns to verify that records reflect reality. This includes checking that cash balances match bank information, that receivables are collectible, that payables and taxes are not overlooked, and that inventory and fixed assets are recorded sensibly. The book strengthens confidence by showing that accounting accuracy is not magic, but method. When readers understand why categories exist and how entries connect, they can detect red flags such as unusual swings, inconsistent margins, or growing liabilities. The overall message is that accounting competence comes from clarity plus repetition, not from innate talent. With that mindset, readers can move from anxiety to steady capability, improving both compliance outcomes and business understanding. In conclusion, this book is best suited for entrepreneurs, small business owners, managers, and professionals who need to understand accounting quickly without turning it into a career change. It also fits students or career switchers who want a friendly bridge into the subject before tackling more formal coursework. The benefit to a reader's life is practical control. When you can interpret what the numbers are saying, you can make calmer decisions about spending, hiring, pricing, borrowing, and growth. You also reduce dependence on guesswork and improve communication with bookkeepers, accountants, and financial stakeholders. The book is worth buying compared to similar titles because it emphasizes approach and understanding rather than dense theory. Many accounting guides overwhelm readers with terminology or treat the topic as a purely technical requirement. Here, the focus is on making the system intuitive, linking transactions to statements, and showing how accounting supports real decisions. That combination can help readers not only learn faster but retain more, because the concepts are tied to meaning and purpose. For anyone who has avoided accounting due to fear or boredom, this book offers a more accessible path to competence. If you would like to support Peter Frampton, you can buy the book through the Amazon link I've provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.